I'm Charlotte McLeod with investingnews.com, and here today with me is Mario Innecco. He runs the Innecco 64 YouTube channel. Really good to be speaking with you. Thanks so much for being here.
You're welcome, and it's nice to be speaking with a new face. Yeah.
Yes, me as well. And I think that you'll probably be familiar to many people in our audience, but I thought since it's our first time talking, if you could start with a little bit of background on yourself and the work you do, that would be great.
Yeah, I mean, I'll go back, way back when I was a kid, a child. I grew up in Brazil, and the reason I say that is because we had a lot of inflation in currencies. So it's something that stayed with me and something that interested me. And it's probably one of the reasons I talk about what I do. Apart from that, professionally, I worked in finance, for over 20 years. I started out in Switzerland at a small private bank. And then I moved to London, and I was a futures and options broker in the government bond market. I got involved in gold privately in 2002, and bought some coins and started looking into things, digging down the rabbit hole, and I found out a lot that is not taught at university. A university is about gold and the monetary system and history. And 10 years ago, I started my channel trying to inform the public about the monetary system, about gold, about economics. And my focus, I try to have a Austrian School of Economics slant, unlike the Keynesian the Keynesian, how can I say, narrative that we hear so much.
Well, really good to get that background on you. I think it helps to contextualize the discussion that we're going to have. And of course, I've got a lot of questions for you today on gold and silver as well. We'll start over with gold. And one question I like to start with when I talk to people is just, where would you place gold in the cycle right now?
Yeah, I think long term, we've been in a bull market since 0102, but then we had that correction and big consolidation for like 13 years from 2011 till actually beginning of last year when we broke out. So long term, it's been 11 years, but I think this is a new leg now. So we're still like in the first few innings, if you want to use baseball terminology, maybe the third inning. And I think we're only just beginning. Yes, we're going to see a lot of ups and downs and noise in the short term, but longer term, I think one needs to just hold on to it and go for the ride.
Absolutely, absolutely. So still early for gold. We've got some time to go. I like the baseball analogies. I think they always help to put it into context. So when you're looking at gold, there's so much going on. What are the key drivers, or maybe we start with the top driver that you're looking at when it comes to the gold price right now?
Yeah, I think it's been the central bank buying since 2022, the accelerated increase in net buying. I think it's been like over 1,000 tons net buying from countries in the what's called the global south, or BRICS, whatever you want to call it. Even countries like Poland have been buying a lot of gold. So I think it's all central bank based, and the reasons for it are a few. One of them is the fact that the West, and specifically the US, has been punishing countries via sanctions for a while now, and also what happened in 2022 vis-a-vis Ukraine and Russia. That woke a lot of countries up, and they realized that their fiat reserves are not safe. So one alternative is to have physical gold in your vault, and I think that's one of the reasons why. And I think the smart money, they're starting to realize that there's a problem, and they're starting to buy gold. Even though I saw the other day a bar chart of family office holdings, and they still only hold like 2% of their assets in gold. So it's still early days. So yeah, I think it's the central bank buying and also the Basel III rules regarding gold as a high liquid, high quality liquid asset, and the tier one category. And I think China as well, they've been huge buyers. They've been encouraging the public to buy gold. They also told insurance companies now since February that they can put up to 1% of their assets into gold. And the Chinese, they buy gold, they buy real physical gold. They don't do the futures. So I think that's also hurting the paper game on COMEX and LBMA, and it's one of the reasons why I think the gold price is accelerated, and also the debt situation in the U.S. We've seen the big, beautiful budget, according to Elon Musk, now is disgusting, and I agree with him. So yeah, I just saw a meme that said, "How do you solve the problem with too much debt?" And then there's Trump, more debt. So I don't think there is a solution short of triggering an economic collapse, a Great Depression, to write off the debt. And I don't see politicians doing that in the US nor in Europe. So we're going to continue to see gold go higher.
Okay, I think there's a lot of key points there that we'll return to and go into a little bit deeper. One point that we mentioned before we turn the camera on that we want to talk about today is the bond market, and I think that's really been drawn into focus by the big beautiful bill. So a lot of turmoil gone on there, and people have a lot of questions. What is the bond market telling us about this? What would you pull out for investors to know about?
Yeah, I'd go back to September last year when I think it was September 18th, the Fed cut rates for the first time in a while. And it was a surprisingly big cut, 50 basis points. People were expecting 25. And ever since then, the 10-year yield has risen from 3.6 to around 4.4, 4.5 right now. And I saw that President Trump today again said that Jay Powell is too late because we had some weak labor market numbers, ADP. So he's still pushing for rate cuts. And I think what that's going to do, it might bring short-term rates lower, like in the short end of the yield curve, but on the longer end, it's not really going to help, just like it hasn't helped since September. And of course, with the debt ceiling situation also being a problem, it's expected that like 7 trillion is going to come due to roll over after the debt ceiling is like suspended, or if it's lifted. I think Trump is looking for 5 trillion more. And it's going to be a problem financing the debt, and foreigners, especially China, with the tariff war, they're going to be less likely to want to help out in terms of buying the debt. So the only way to attract buyers is going to be through offering higher rates. So that's not going to be good. That's how I see it.
Yeah, definitely. I think factors lining up that show us it's not going to be good. From a broad perspective, what's your outlook for the U.S. economy? How do you see this playing out?
Yeah, I mean, back in 2022, we had 2 quarters of negative growth, but they said it wasn't a recession. So it's always difficult to say, oh, we're going to have a recession, because they can change the rules. But I think it can only hurt if bond yields continue to rise, because it affects the whole economic picture. You get higher mortgage rates, higher credit card rates, higher rates for financing corporations, private equity, they're in trouble. That's another big problem. I think they're highly leveraged and very illiquid, and I think a lot of people have assumed that rates were going to go back down, like they have been really low since the early 80s. But my premise for the last few years is that bull market in bonds and low rates, that's finished. Unless, of course, the Fed really comes out with the bazooka and prints trillions upon trillions to buy the bond market. But then, the dollar is going to be like confetti. It's not going to be buying much. And it's not just a dollar, because all the other major countries will follow. And that's why I continue to think that gold is still in the third inning.
Yes, it all comes back to gold. And so you'd mentioned the strong interest in gold in China, and we'll come back to China. But I just want to mention, so we've got all of these circumstances playing out in the US, in the Western world. At what point do you think Western interest starts to wake up more to gold?
Yeah, that's a good question, because it seems like the West is just like throwing away its gold towards the East, and it's a shame. I don't know. I mean, maybe when things get really bad, but I think they're going to try to ignore gold as long as they can, because gold is the anti-debt, and the system we have where governments can do whatever they want, like they've been doing for decades, is really tough to do under the discipline of gold. It was Alan Greenspan who said in his essay, Gold and Economic Freedom, that statists hate gold because it puts them in a straitjacket. So maybe Trump might bring back some kind of vestige of gold. That's possible. But then again, he's not seen as a very popular guy in the rest of the West. So yeah, here in the UK, we've only got 300 tons. Gordon Brown sold half of it about a quarter century ago. I guess in Canada, where you are, you've got zero gold reserves. I think he used to have like over 1,000 tons in the 60s. So yeah, maybe it will take also the BRICS to come out in July this year at the summit in Rio and announce some kind of gold dependent system. Not saying it's going to be a gold standard, but something to do with gold, and maybe people will start waking up. But I wouldn't hold my breath.
Yeah, fair enough. And on the note of the BRICS, I know people look forward each year with excitement toward the meeting to see what are they going to announce. Is it going to have an impact on gold? Anything further you would say that you might be looking for at this year's meeting?
Yeah, I mean, I don't have like access to what they're thinking, but I saw that Donald Trump Jr. With a gold company that he works with, they're talking about some kind of real reset. It's only speculation, but I think it will become important part of the BRICS payment system, gold, because when you substitute the dollar as the major reserve asset, no other currency will do as a reserve asset currency, because it doesn't have the credibility that the dollar used to have. I mean, the dollar is still running on fumes, so to speak, because it used to be as good as gold, supposedly, until 71. So the only reserve asset that BRICS and other countries will trust is gold. So that's why people speculate always about BRICS. But I think the other important thing to keep an eye out in the BRICS summit is how many more nations asked to join. And I think that's very significant. Saudi Arabia still seems to be sitting on the fence, because I don't think they want to upset the US, but they're kind of 1 foot in BRICS and 1 foot still in the old petrodollar system.
Okay, yeah. Well, we'll keep an eye on what happens at that BRICS meeting. I totally understand. Of course, you can't know the inner workings of what's going on there. You had also mentioned toward the beginning of the conversation Basel III, and I know that people in the gold sector, I know that they know it's important, but they might not know all the details and new elements that might be coming up. So anything you would explain there that you think we should know?
Yeah, the EU banking sector, they adopted Basel III vis-a-vis gold in 2023 already, beginning of 2023. The UK and the US haven't, and the US is supposedly, that's the thing about Basel III. It's not very clear, and you've had the LBMA come out and say a few things that basically negate the whole story. But I think, yeah, the U.S. banking sector, they're looking to adopt Basel III and gold as a tier one asset, and all that means is that allocated physical gold is going to be like risk free, and unallocated won't be. So banks will prefer to have physical gold. And I was listening to another commentator the other day, and he said that the reason the BIS, who does the Basel III regulations, they saw that during COVID, there's a major trouble with bullion banks, LBMA and COMEX, because it was highly leveraged, unallocated, and the market almost collapsed. The gold market, not in price, but the whole system. And that's why they want to impose the Basel III rules for banks that, yeah, if you want to trade gold and if you want it to be spot, it has to be allocated and tier one asset, and you have to follow the Basel III rules. So it looks like the U.S. banking sector is going to adopt it. Maybe that's why there's been so much physical gold flowing into the U.S., like from late last year to earlier this year. As for the UK banks, I'm not sure if they're going to adopt it. I think the LBMA is still trying to. Yeah, they're not happy about it because the LBMA market, the bullion market in London, is very paper dependent, and this is going to spoil their game, where they make a small profit from hedging physical versus paper. Yeah, so that's how I see it.
Really interesting, and also interesting that you bring up that flow of gold into the US. I feel like I was hearing a lot about that at the beginning of the year, and so much speculation that it's related to tariffs, et cetera, et cetera. But maybe it could be for this reason instead.
Yeah, I don't think it's related to tariffs because when President Trump announced that Liberation Day, a lot of information came out, and I think there was bullion was excluded from all of the tariffs. So, yeah, if all the gold went to the U.S. because they're concerned for tariffs, then we should see all the gold flowing back and the gold price collapsing, and we haven't seen that. So that's why I don't think it was because of tariffs.
Yeah, I think that makes sense on that follow-up. Okay, so let's take a look over at China. I said we would come back to what's happening in China. So you mentioned a couple of points. There were the insurance companies that earlier this year are now allowed to invest in gold. Other recent developments in terms of China and gold, we've got the Shanghai Futures Exchange saying it will open up the futures market to overseas investors. So those are a couple of interesting things in terms of China and gold. I'm wondering what you think it means for the gold market and China's involvement.
Yeah, I think it's highly significant, and the fact that China is applying Basel III rules as well is basically disrupting the whole Western paper game. And the reason why I think China is opening up the Shanghai Futures Exchange to foreign investors is that It's all part of internationalizing their currency more and also making it more trustworthy. Because if you're going to give up on using the dollar, let's say China is doing trade with the Philippines, instead of using the dollars, they're going to pay the Philippines with yuan. The Philippines might not trust the yuan as much, so they can just take gold. Or Saudi Arabia, they're also looking to, I think, the Shanghai Gold Exchange. They're opening vaults like in third countries, like they're opening one in Saudi Arabia. So I think it's all part of making the yuan, the renminbi, more international. That's what it's about, and I think it's highly significant, and it's gonna continue to put pressure on COMEX and LBMA, because this is all physical gold that they're working with, and and it will facilitate trade, and people will trust more the yuan if you can exchange it readily for gold. And if you can keep that, the vault is in your country, that's even better. They're not just talking about Saudi Arabia, but Singapore, Hong Kong, and other places. There will be a Shanghai Gold Exchange vaults. And so that's how I see the China situation. I think their gold and silver will be priced from China in the next few years. They're going to take over. And unfortunately, like you said earlier, the West doesn't seem to care about gold, but China does. And I think the amount of gold that they say they have officially, the PBOC, is a very small number. I think they have a lot more that we don't know. So yeah, I'm not defending China here. I'm just stating what's going on.
Yeah, that was exactly the direction I think I was going to go in. Is I've been hearing a lot about this means that China is going to start to be more of a driver of the gold price. So can you talk a little bit more about what that means maybe for the gold price and the gold market as a whole? Obviously, it's going to be quite significant.
Yeah, I mean, I just saw a tweet or a post on X before we came on, that JP Morgan made a research that if there's 0.5% of foreigners reserves in dollars, if that flows into gold, just half a percent, it would drive the gold price to 6,000 by 2029. I mean, let's say it's 5%, which is 10 times what JP Morgan's saying. Will it go to 60,000? I don't know, but it will be higher than that 6,000. So that's how significant it is. And the sky is the limit, so to speak. That's the way I see it. And it will not just drive the price of gold in yuan, but in every currency out there.
Yeah, so clearly massive potential implications for the gold market, the gold price. I was going to ask you about your thoughts on where the gold price goes in 2025. I know you mentioned, of course, bullish, but we're going to have ups and downs, and people should be aware of that. So anything further to add on gold price in 2025?
Yeah, I mean, 4,000 is not, I think is quite realistic. Yeah, so that's minimum, I would say, in 2025.
What do you think about silver? I wanted to get your take on silver as well. So it's doing pretty well this week, knock on wood, fingers crossed. But I know that people are frustrated because they see the gold price so high, they look at the gold silver ratio and they feel that silver should be higher. So what are your thoughts on the outlook for silver?
I like silver too, and I have silver. And I remember back in 2002 when gold started rising, silver only really started taking off in 2005. And if you look at the 1970s, I think silver was like trading sideways from 75 to like 79, going nowhere, and all of a sudden it just took off. So I think silver will eventually take off. It could be very soon if we break that 35 level. And yeah, every bull market since the end of the Bretton Woods system in 71 that we've had in the precious metals, silver's always outperformed, but sometimes it takes a little longer for it to do so. And yeah, I mean, right now we're just below 100 in the gold silver ratio. Back in 2011, we got down to like 30. I wouldn't be surprised if we retest that eventually and maybe even lower the gold silver ratio. So I'm positive on silver as well. But the key there is patience and also having gold. Because people ask me, oh, should I sell my gold and buy silver? And I say, no, just buy both. Yeah, that's the way I see it.
So silver, still we need some patience. I think, yeah, we've learned to be patient with silver. When you look at silver, it's got its precious side and it's got its industrial side. So how do you weigh those when you're looking at the market?
Yeah, I mean, I look at it more as a precious metal, monetary, because I'm not an industrialist or anything. But yeah, it does affect it. I mean, let's say if you have a weaker economic numbers, if the economy slows down, you see the base metals and copper go down. Silver might be affected as well. But I think, yeah, I also think the commodities are a good place to be because they're going to keep inflating the system. And if you look at copper, the last time I looked at it a day or two ago, it was near $5, the high grade copper contract. So yeah, I do realize that the industrial side of silver is important, but also it's also positive because a lot of the new technology it needs silver, and also the other thing that needs silver is the military. And unfortunately, we're hearing a lot of saber rattling from Europe, and the U.S. is always loading up on its military budget. So yeah, that's the other thing people don't seem to talk too much, that silver is a really important military metal. And it's also had 5 years of deficits, silver. And one might say, well, you can always recycle old silver, but the price is still relatively low to make it interesting to recycle. So I think we need higher prices.
Really good points. I think people do get maybe kind of stuck on that solar panel angle on the industrial side of silver and forget those other uses. So good to go into that. And you went in another direction that I was hoping to go in. So I think people are really looking right now for places of safety. So we've got gold, we've got silver, but you mentioned the broader commodities complex. So any other areas there that you believe are safe, or maybe the whole thing as a whole is looking pretty good?
I think the whole thing because for 40 years, since the early 80s, the focus has been on financial assets. And now, with the bond market, in my opinion, being in a bear market, financialization is going to reverse, and real things, real assets are going to become relatively more important. And that's why I see commodities going forward as a good place to be. And commodities are very cyclical, and we haven't really had the last time there was a bull market in commodities was 2011. So I think it's about time that the cycle goes up. And I think it started in 2020 when we had the crash, everything crashed, and commodities after that rose, and we've been consolidating since 2022. But I think it's going to pick up again.
And I'm also curious how you feel about gold and silver stocks, mining stocks in general. I know some people really prefer to stay on the physical side. Do you include gold and silver stocks, other mining stocks as assets that people should be looking at?
Yeah, I mean, when I started buying gold and silver, I just bought the bullion, the coins and bars, and then the more you look into things, you learn about the mining sector. So yeah, it's something that I'm involved in, and but it's a different animal, of course, to bullion, and but it's there's a lot of opportunities there as well. Even though the last few years has been frustrating for the miners, I've noticed that. Of late, when you've had a big correction in bullion, the miners haven't really dropped that much. So I think that's encouraging. So yeah, one thing I would say is it depend. Make sure you know what your risk appetite or your risk, you know how much risk you want to take, and be aware that it's there's different kinds of miners as well. There's the big producers, which are fairly safe but still volatile, and then at the other end you've got the junior explorers, which are basically you're going on a treasure hunt there. So it's very risky, but it can be very rewarding as well.
Yes, definitely. I think people should be aware of their risk tolerance and what they want to have in their portfolio. I was going to ask, keeping in mind everybody is different, where do you favor in terms of that food chain? Do you like to be at the top end with the big miners or toward the riskier end? What do you like right now?
Yeah, I mean, I'm focusing right now on silver miners, and I do have a position in the mine in a company that is redeveloping a mine that already mined a couple of decades ago. But yeah, I think it's good to have a mix, really. But right now, I don't. But yeah, like have some Newmont and the big ones, and then mid tier. One thing I tell my viewers is go to GDXJ Prospectus or GDX and look at what they hold, and pick some companies from there and study them, and then decide where to put your money like that.
Yeah, definitely. You can use that as your blueprint and pick out the ones that you prefer. Okay, I think that's really helpful. We've gone through, I think, a lot on the gold and silver side. I will let you go, but before I do, I'll ask if there's anything you'd leave investors with, maybe let people know where they can find you.
Yeah, you can find me on YouTube at Innecco 64. I post a video every day. We do a live stream on Sunday evening, London time, 8 p.m. And yes, what else would I say to people? Yeah, just patience is really important. And I think holding gold is not about trading it, because we are at a juncture where all the currencies are going to be debased massively. They've already been debased. I mean, when I started buying gold, it was at 220 pounds an ounce, and now it's 2,500, which is like 10 times, more than 10 times. So yeah, don't trade your physical gold. Maybe trade your mining stocks. That's what I would do.
It makes a lot of sense to me, and I'll have your details in the video description so people can click through. Thank you so much for coming on to talk about gold and silver. This was great.
You're welcome, and thank you for inviting me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Mario Innecco.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.